Last year, over 32,000 Canadians were anonymously reported to the Canada Revenue Agency by their neighbors, their coworkers, their former business partners, and in some cases, their own family members. The CRA has two separate programs designed to collect these tips. One of them is completely anonymous. The other one actually pays the informant a percentage of every dollar the CRA collects from you. Together, these programs have brought in nearly $500 million, and most Canadians have never heard of either one. In this video, I'm going to show you three things. First, exactly how the CRA's domestic snitch line works, who's using it, and what happens the moment a tip lands on their desk. Second, the offshore program, where the CRA literally signs a contract to pay someone for turning you in. And third, the specific penalties you face if any of this leads to your door, and 5 steps you can take right now to protect yourself. The CRA calls it the Informant Leads Program. Everyone else calls it the snitch line. And it has been operating quietly since 2014. Here's how it works. If someone suspects you of tax evasion, benefit fraud, or any kind of tax cheating, they can contact the CRA through 4 different channels. They can call a dedicated hotline, they can submit a form online, they can fax it, or they can mail it. The phone number is toll-free. The online form takes about 5 minutes, and at no point does the CRA ask the tipster to identify themselves. That's worth repeating. The person reporting you does not have to give their name. The tip goes to the CRA's National Lead Center in Scarborough, Ontario, where it is reviewed, categorized by severity, and then distributed internally on a strict need-to-know basis. Depending on what the tip contains, it gets routed to one of 3 divisions. The audit division, the non-filer program for people the CRA believes should have filed a return and didn't, or criminal investigations for cases that meet the threshold for prosecution. And the scale of this program is not small. The CRA processes over 32,000 tips per year through this system. According to reporting from CBC News and confirmed by CRA departmental records, the snitch line has generated approximately $490 million in recovered tax since 2018. That is not an estimate. That is what the CRA itself has attributed directly to informant leads. Now, I want to be clear about something. The domestic snitch line does not pay informants. There is no financial reward for calling in a tip about your neighbor's cash business or your coworker's unreported rental income. People do it for their own reasons: grudges, divorce disputes, business disagreements, sometimes genuine concern about fairness. The CRA actually ran focus groups to understand why Canadians would or wouldn't use the snitch line. And what they found was revealing. The majority of participants said they were deeply uncomfortable with the idea of becoming a government informant. They described it as morally conflicting. They worried about unfairly judging someone's situation. And yet, 32,000 tips still come in every single year. Whatever discomfort Canadians feel about informing, it is clearly not stopping them. Now here is where it gets significantly more serious, because the domestic snitch line is only half the story. In January 2014, the CRA launched a second program called the Offshore Tax Informant Program, known by its acronym OTIP. And unlike the domestic snitch line, this one pays. Here is how it works. If someone has specific, credible information about a Canadian who is hiding money offshore or engaging in international tax evasion, they can contact the CRA directly. The CRA evaluates the information. If the potential federal tax owing exceeds $100,000, the CRA will enter into a formal contract with the informant. That is not a figure of speech. They sign a legal contract. Under that contract, if the CRA successfully audits the target and collects additional federal tax, the informant receives a reward of between 5 and 15% of the federal tax collected. Not the total amount assessed, the amount actually collected, excluding penalties and interest. Let me put a number on that. If the CRA collects $1 million in additional federal tax based on your information, the informant receives between $50,000 and $150,000. If they collect $5 million, the reward could be as high as $750,000. And the CRA is patient about it. They wait until the taxpayer's objection and appeal rights have expired before making any payment. There are no upfront payments, but the reward, when it comes, is substantial. Since the program launched, the CRA has entered into 48 contracts with informants. Over $1 million in rewards have been paid out. And that number has grown significantly since the program's early years, as the CRA has become more aggressive in using informant-sourced intelligence to build audit cases. One more thing about OTIP that most people miss. The reward itself is taxable income. So if you receive a $100,000 reward for turning someone in, you owe tax on that reward. The CRA thought of everything. Now, consider the incentive structure this creates. If someone knows you have undeclared offshore accounts, undeclared foreign property, or international income you haven't reported, they have a direct financial incentive to contact the CRA. The more you owe, the more they stand to earn. And the CRA has designed the program specifically to encourage this. Let me walk you through exactly what happens from the CRA's side once a tip comes in, because this is the part most Canadians don't understand. When the CRA receives a lead, either from the domestic snitch line or from OTIP, it enters a 3-stage process. Stage 1 is the initial review. The tip is assessed for credibility and specificity. Not every tip results in action. The CRA has publicly stated that they evaluate each lead on its merits. Vague accusations with no supporting detail are deprioritized, but specific information, things like addresses, business names, dollar amounts, account details, gets fast-tracked. Stage 2 is active investigation, and this is where things escalate quickly. Under Section 231.1 of the Income Tax Act, the CRA has the authority to access your bank records, compel document production, and interview third parties, including your spouse, your accountant, and your business partners. As I covered in a previous video, they can do all of this without a court order. The amended Section 231.1 gives them access to any person connected to the file. If the investigation involves suspected offshore assets, the CRA can also issue requirements to foreign financial institutions and use information sharing agreements with over 130 countries through the Common Reporting Standard. Stage 3 is enforcement. If the CRA determines that tax was evaded, they issue a reassessment. You owe the additional tax, plus interest calculated daily, plus penalties. And if the evasion is significant enough, the file is referred to the Criminal Investigations Program. Let me be specific about those penalties because this is where most people underestimate the exposure. Under Section 239 of the Income Tax Act, tax evasion on summary conviction carries a fine of 50 to 200% of the tax evaded, plus up to 2 years in prison. On indictment, the fine increases to 100 to 200% of the tax evaded, plus up to 5 years in prison. But there is a third path that most people don't know about. If the Crown proceeds under Section 380 of the Criminal Code, which covers fraud, the maximum sentence is 14 years. 14 years. For tax fraud, that is not a theoretical maximum pulled from an obscure statute. It is a charging option the Crown has used and continues to use in major tax evasion cases. And the financial penalties don't stop at the fine. You still owe every dollar of tax that was evaded. You owe compounding interest on the full amount, dating back to the original filing year. You may face additional civil penalties on top of the criminal fine. Your passport can be flagged. You will be fingerprinted, and you will have a criminal record that follows you for the rest of your life, all because someone picked up the phone. So who is actually being reported through these programs? The CRA doesn't publish a demographic breakdown of snitch line targets, but based on CRA enforcement data and the types of leads the program is designed to capture, there are 6 categories of Canadians who face the highest risk right now. Number 1, cash-heavy businesses, restaurants, contractors, salons, and trades. If you Operate a business where a significant portion of your revenue comes in cash and someone in your orbit suspects you are underreporting, you are a prime target for the snitch line. Number 2, unreported rental income. If you are renting out a property, a basement suite, a cottage on Airbnb, or a spare room, and you haven't been declaring that income, anyone who knows about it can report you, your tenants, your neighbors. Even the platform itself now reports to the CRA. Number 3, crypto traders who haven't declared their gains. The CRA has stated publicly that cryptocurrency is property for tax purposes, and capital gains on crypto dispositions are taxable. With the Common Reporting Standard for Crypto Asset Reporting, known as CARF, now effective as of January 2026, exchanges are reporting your transactions directly. If you haven't been declaring, the window to correct that is closing fast. Number 4, gig workers who are underreporting platform income. As I covered in a previous video, platforms like Uber, Airbnb, and Etsy now report your earnings directly to the CRA. If what you declared doesn't match what the platform reported, you are already flagged. And if a coworker or friend knows you've been pocketing cash deliveries off the books, the snitch line is one phone call away. Number 5, CERB recipients who are not eligible. The CRA has identified approximately 1.2 million Canadians who received CERB payments they may not have been entitled to. That is over $10 billion in outstanding repayments. If someone knows you collected CERB while working under the table, you are a high-value target for the Informant Leads Program. And number 6, anyone with offshore accounts or foreign property worth more than $100,000 that has not been properly reported on the T1135 Foreign Income Verification Statement. This is specifically what OTIP was designed to catch, and the financial reward for reporting you makes it extremely attractive for anyone with knowledge of your offshore holdings. Now, here is what you can do about it. Step 1, file complete and accurate returns. This sounds obvious, but it is the single most effective protection you have. The CRA's enforcement apparatus is designed to catch discrepancies. If there are no discrepancies, the snitch line loses its power. A tip without supporting evidence gets deprioritized. A tip that contradicts your accurate filings goes nowhere. Step 2, declare all income, including cash, crypto, gig platform earnings, and rental income. The number 1 category of informant tips relates to unreported income. If every dollar is accounted for, a tip about you leads to a review that confirms your compliance. That is the outcome you want. Step 3, keep 6 years of records for domestic income and 10 years for anything involving foreign income or property. If the CRA opens a file based on an informant tip, the first thing they request is documentation. If you have organized, complete records, the audit proceeds quickly and in your favor. If you don't, the CRA fills in the gaps with their own assumptions, and those assumptions are never in your favor. Step 4, if you have unreported income or unfiled returns, consider the voluntary disclosure program before the CRA contacts you. This is critical. The VDP allows taxpayers to come forward and correct past filings with reduced penalties and no criminal prosecution. But it is only available if you approach the CRA before they approach you. Once a snitch line tip triggers an audit, the VDP window closes. Step 5, if the CRA contacts you, engage a tax lawyer immediately, not your accountant, a lawyer. Here is why this matters. Communications with your accountant are not privileged. The CRA can compel your accountant to hand over their working files, their notes, their internal memos about your situation, but communications with a lawyer are protected by solicitor-client privilege. The CRA cannot access them. If you are facing an audit triggered by an informant tip, the first professional you call should be a lawyer, not your accountant. You can bring your accountant in later, through the lawyer, which extends the privilege protection. 32,000 tips per year, $490 million recovered. A paid informant program with a financial incentive structure that makes reporting you profitable. This is the system the CRA has built, and it is not slowing down. If you want to stay informed about the CRA rules, tax laws, and enforcement programs that directly affect your financial life, subscribe to this channel. I cover the things that matter, explained clearly, so you're never caught off guard.